Hi YouTube, my name is Kenneth and today we're going to talk about building credit without a credit card. So, if you're like most Americans, you've been told you have to have a credit card to start building credit. Now this just isn't true. So what lenders are mostly wanting is some type of payment history. They want to know that you're responsible and you've paid your debts off on time, all the time. So there are three less commonly used ways of starting to build this credit. So the first way is by getting a secure loan. Now, what a secure loan is you would put money with a bank and then get a loan from your own money. Now, you would make monthly payments to the bank. So what this does is it builds credit, it builds a payment history, and it's not the worst way to start building a credit score because it also builds interest while it's sitting in the bank. Now with low interest rates at the banks, you may not be able to get too much from the interest on it, but it's something, and it starts you on the path to building a good credit score. Now, the second thing is going to be to get a loan that you have the money for with a cosigner. Now, this is probably one of the most controversial ways because it requires someone else's credit to build yours. So, when you get a cosigner, make sure you get a small loan because you do have to have someone else on this loan with you. You don't want to get a bad relationship with them. So something that you might get a cosigner for would be, let's say, a car that you have the money to buy right now, but you want to start building credit. So for example, you find a car that's, let's say, $2,000 or $3,000 and you have $2,000 or $3,000 in the bank. Now, a bank may be willing to let you buy the car without a cosigner if you use that money as a secure loan. Most likely they're going to want a cosigner though, just in case. Now, this goes bad a lot, so you will have to prove to the person you're asking to cosign for you that you do have the money and you have the capability to pay the loan off fast if something happens. You also want to make sure that if something happens and you can't pay it off, that person can. That way it doesn't affect your personal relationship. I don't recommend this, but it is one way that you can build your credit. Now the last way has gotten more popular. So if you've heard of the Experian Credit Boost, that's what this is. And it's basically just asking. So a lot of rental companies have programs that allow you to start building credit while you're paying your monthly payments. Utility companies may have something like this. Your electric company, where you get your TV, where you get your water, where you get your internet, your phone provider. They all have these programs. Now you do have to ask for them. They're not going to offer them because it does require an additional fee for them, and most of the time it's not worth it for them. So just ask. Now, with the Experian Boost, this is a little bit different because you log in to your bank account or certain accounts. Now, one of the most popular ones right now is Netflix. If you're wondering how Netflix can help you build your credit, well, if you've had payments with Netflix, then you have a positive credit history. Now, it may be for $15, but it's something that creditors can start looking at, and it's positive, and they won't mind helping you out a little if they know that you have a positive credit history and a positive payment history. Now, there are a bunch of different ones. If you have a subscription, odds are Experian Boost will help you with this, and it's a good place to start for free by doing the stuff that you're already doing. Now, to close this up, I do want to let you know why I don't think a credit card is the best solution for people without credit scores. One, most likely, this demographic is going to be younger and less responsible with money. So it's better to have something where you can't just go, hey, I want this and this and this, and go buy randomly. You want something that you actually have to plan for. For example, if you get a secure loan, you have to, you can't just pull money out of the bank. You have to pay it month by month. So it's not like a credit card where you just, oh, hey, I want to spend $50 this month, $50 this month, and I don't want to necessarily pay it all back. You have to pay it all back month by month, and you can't pull out the money after you put it in. Now, also with the just asking, it just allows you to use your already positive payment history for future purchases. So I want to thank you for watching. If you found this useful, don't forget to leave a like and subscribe for future content. Thanks for watching. Have a good day.